Hello and welcome to Audit 6. It's been a long journey on our audit engagement. We started with ensuring that we comply with the general tip. Then with all our bubbling energy, we went to the field and spent countless sleepless nights ensuring that we got the perfect field pick. Now I know we're tired. Our hairline is receding. We've learned to survive on caffeine. We've forgotten what sleep. We've lost all our dates. But guys, hold on. You still yet to print your audit report which expresses your opinion on the financial statements. Remember, you've done all your hard work to ensure that you gather sufficient, appropriate audit evidence corroborating with these numbers. So management, those guys, they are responsible for the financial statements. We are responsible for our opinion on these financials. And guys, expression of an opinion, that's what we paid all the big bucks for. Now, as we know, we need to check on all the reporting standards before we print out our report. So let's recap. All clean and dirty elements, that's what we report. The A, that stands for our accounting principles in conformity with GAAP. Are the financials, they're consistent from year to year? Have they made proper disclosures? And then E was, as we know, very important expression of an opinion. So let's say we've done our audit. We've gathered sufficient, appropriate, corroborative audit evidence. And we found that yes, accounting principles, that's as per GAAP. Management, they've been consistent from year to year and they've made proper disclosures. This is a case when all is well. So in real life, audit report in such situations is the easiest thing. You got a standard audit report template. You just fill in the blanks. You fill in your client name, the audit year, the date of report, sign it, and you're done. So guys, as I told you, this is when all is well. This is the unmodified opinion. So let's put it here, unmodified opinion. And this is a standard audit report template. And as I said, this is all is well. So you've been able to gather sufficient, appropriate, corroborative audit evidence. You've done your audit as per GAS. And you've made sure management, they've complied with GAAP on these financials. Now, there might be times when you want to highlight something on your audit report. Now, you've done your audit per GAS, management, they followed GAAP, everything's fine, but still there's something you want to highlight on your audit report. You might want to emphasize on a matter on your audit report. You might want to put certain other matters. So that is when you keep the opinion as unmodified and you might want to add an emphasis of matter para. Emphasis of matter para or even an other matter para. So if you want to emphasize on something that's presented or disclosed on the financials, you might want to put an emphasis of matter para. If you want to talk about something which is not there on these financials, then you might want to have an other matter para. Now guys, I'm talking about these paragraphs on the unmodified opinion. So the opinion still remains clean, but there's some emphasis or other matter para. Let's take an example. Let's say management, they followed GAAP, but they have not been consistent from year to year. And that is for a reason which is justified with reasonable justification. In that case, we'll still keep the opinion unmodified. We'll still give a clean opinion because they have not been consistent, but for justified reasons. But we would want to add an emphasis of matter para to emphasize that though it's unmodified opinion, though the opinion is clean, we want to highlight, emphasize that they haven't been consistent. Let's say management, they've got a going concern doubt. They're not sure they'll be able to go on with their business for a reasonable period of time. Their ship is sinking. They've made appropriate disclosures on the financials. But this is something we would still want to highlight on audit report. Now, since they followed GAAP, they've made proper disclosures, we'll continue to give an unmodified opinion. But we'll add an emphasis of matter para to emphasize this going concern doubt or an uncertainty. So we'll talk about that as we go on. So this is unmodified opinion, where we do not modify our opinion. Our opinion remains clean, standard audit report. We might add an emphasis of matter para or an other matter para to the standard audit report. Now, if we find something fishy on these financials, we think management, they have not properly followed GAAP. Something fishy out here. That is when we might want to qualify our opinion. Now, we're talking about GAAP issues now. So, we're talking about qualifying our audit opinion. So, this was an unmodified opinion. This is a qualified opinion. So, this is qualified except for GAAP. So, what we would say is management, they followed GAAP except for a particular issue. This is a material GAAP issue. So there's something fishy here. So it could be that accounting principles, that's not as per GAAP. Let me use the black pen. So accounting principles, they're not as per GAAP. They have not been consistent. Now, this is consistency, lack of consistency without justification. If this lack of consistency was justified, we would still go for an unmodified opinion. We might add an emphasis of matter para. But if the lack of consistency is unjustified, that's non-GAAP. That's a GAAP issue. If they haven't made proper disclosures, that's again a GAAP issue. So when the GAAP issue is material, when the financials, they are fishy, that's when we give a qualified except for GAAP issue. How about the financials? They are shitty. They are all cooked up numbers out here. That's when it's a serious, a material and a pervasive GAAP issue. And here we want to give an adverse opinion. So we would give an adverse opinion out here. So again, it could be when the accounting principles, they are not as per GAAP. They have not been consistent from year to year, not made proper disclosures. And this is a material and pervasive GAAP issue. Very significant, very material GAAP issue. We give an adverse opinion. We say these financials, they are shitty. They are not as per GAAP. So guys, we started with talking about a clean opinion, unmodified opinion, standard audit report, when we said all is well. Then we said if there are any GAAP issues, we could give a qualified GAAP opinion or an adverse opinion. How about when we went out to the field, we were not able to gather sufficient, appropriate, corroborative audit evidence? That's very important for us, right? We need this corroborative, sufficient, appropriate evidence to ensure that we can give an opinion on these financials. If we don't have it, we might not be able to express an opinion. So let's talk about gas issues now. So inability to gather sufficient, appropriate evidence. Let's say we've gone out to the field and we've put a tripod stand, we've gotten our cameras ready, we are all set to take a perfect field pic. It suddenly starts raining. We're not able to take a pic, we got to pack up. So we are not able to gather corroborative audit evidence because it started raining due to circumstances. It was not our fault, it was not the management's fault. It just started raining, circumstances. So that's a scope limitation. The scope of our audit is limited. Why? Because we didn't take the proper field pic because of circumstances. In such a case, this is a gas issue. We might want to express a qualified except for gas opinion. So it could be a qualified. So this was a qualified except for GAAP opinion. This is a qualified except for gas opinion. So this is a case of a material gas issue. And this of course includes a scope limitation. Scope limitation as a result of circumstances. How about there is certain uncertainties for which we are not able to gather sufficient, appropriate, corroborative audit evidence? That could also lead to a gas issue, a qualified except for gas opinion, because that's a material gas issue. So let's get back to our example. Let's say we've gone to the field, we've set up our tripod, we've set up the camera, we're all set to take the field pic. Suddenly the management comes, they take our lenses, throw it off. They break our lenses. Do you want to express an opinion on the financials of that management which broke your lenses? No, I won't. In that case, you have an option of giving a disclaimer of opinion, because this is a scope limitation, not due to the fault of circumstances. It's the fault of the client. It's the management's fault. So disclaimer is a case where we do not express an opinion on the financials. Guys, we were hired to express an opinion on the financials. Now that's an option. That's a report, audit report, where we give a disclaimer of this opinion. So if it's a gas issue, material, qualified except for gas. If it's a gas issue which is material and pervasive, scope limitation, management's fault, we would give a disclaimer of opinion. So this is a gas issue which is material and pervasive. So disclaimer could be due to scope limitation. With the management, they broke our lenses. They didn't allow us to gather sufficient, appropriate, corroborative audit evidence. Fault of management. Or even in case of uncertainty. If it's uncertainty which is material, qualified except for gas. If it's a very big, very significant uncertainty, such that we are not able to form an opinion on these financials. Stuff is so uncertain. In that case, we do have an option of giving a disclaimer of opinion. So uncertainty, very serious. How about we're not independent? Guys, can you express an opinion on the financials if you're not independent? You can't do an audit. So that would again be a disclaimer of opinion. So if you were not independent or you lost your independence during your audit. So if you didn't meet your general tip, disclaimer of opinion, you don't want to express an opinion on the financials. So guys, look at the way we are building it up. We started with a clean opinion, a standard audit report, an unmodified opinion. Then we said, if there's a gap issue, if these financials, they're not as per gap, if they're fishy, qualified gap. If they are shitty, adverse. How about when we are not able to gather sufficient appropriate audit evidence? We are not able to do our audit as per gas. That's a gas issue. If it's a material gas issue, qualified except for gas. If it's a material and pervasive, very significant gas issue, something like management didn't allow us to do our audit, that is when we give a disclaimer of opinion that's equal to no opinion on the financials. So let me just try to put it together. We said unmodified, that's the first kind of opinion we're going to talk about today. We're going to start with talking about unmodified opinion. Then I'm going to show you cases where we add an emphasis of matter para and or an other matter para to emphasize something which is presented or disclosed in the financials, to talk about something which is not there on the financials but the auditor wants to highlight it. So this is the second kind of, rather this is the second case under unmodified opinion that we'll talk about. Then we'll move down and talk about the gap issues, the qualified except for gap issue, or the adverse opinion where we see that the financials, they are shitty, we say they are not as per gap. Then we're going to come down to this side of the board. We're going to talk about gas issue. If it's a material gas issue, qualified opinion except for gas. So both these opinions are qualified, but this is qualified due to a gap issue. This is qualified due to gas issue. Then finally, we'll talk about a disclaimer of opinion. Now, there might be cases where you think that the financials, they are false, they are misleading, they are fraudulent, they are deceptive. In such cases, you would actually want to withdraw from the engagement because you don't want to be associated with such financials. You won't even give a disclaimer of opinion. You would withdraw from the engagement. So that's always there as your option. Withdraw from the engagement. So if the financials are misleading, false, fraudulent, or deceptive, you would as well withdraw. So guys, we're going to look at all this as an overview on the book, and we're going to come back and start with a standard audit report. We have said for a lot of fun out here.
Let's look at the unmodified opinion and the various kinds of modified opinions on page 3 of Audit 6. So you have a chart on this entire page. On top of the chart, I want you to write unmodified opinion is equal to unqualified opinion. It's just the same thing, two different terminologies. Earlier they used to call it unqualified, now they prefer unmodified. On the first bubble there, write Roman numeral 1, put a box around unmodified opinion and underline standard audit report. So first we'll look at an unmodified opinion on a standard audit report. Then we'll move on. So the next bubble, put in Roman numeral 2 and we'll look at unmodified opinion with emphasis of matter para and with other matter para. So underline emphasis of matter, underline other matter. So these are clean opinions where we don't modify our opinion, hence we call it unmodified opinion. Then towards the middle of the page we have modified opinion. Put a box around modified opinion. Under modified opinion we could have gap issues or gas issues. So when we have a gap issue, we're looking at a qualified opinion or an adverse opinion. So where you have qualified opinion except for gap, write Roman numeral 3A. Where you have adverse opinion, put in Roman numeral 3 and B. And on the left, write gap issue. For qualified opinion, write material but not pervasive. For adverse opinion, it's material plus pervasive. Then on the right, we are looking at gas issues. So where you have qualified opinion except for gas, write Roman numeral 4A on the bubble. And on the bubble for disclaimer, where we do not express an opinion, put in Roman numeral 4B. And on the right, make a note, right? Gas issue, for qualified opinion, it's material but not pervasive. For disclaimer, write material plus pervasive. So if everything is fine, we give an unmodified opinion. If there are certain gap issues or gas issues, we could give a modified opinion. But if we find that the financials are false, fraudulent, deceptive or misleading, we would prefer to withdraw from the engagement. So on the bottom of the page where you have withdraw, put a box around the word withdraw.
Now, we'll start with looking at the standard audit report, where we as auditors, we express an unmodified opinion. That's basically a standard template. We just need to fill in the blanks, sign off, we're done. Remember, but that's only when all is well. When we've conducted our audit as per GAS and we found that the financials, they are as per GAAP. So let's look at the unmodified opinion on a standard audit report. Now, the title of this report is Independent Auditor's Report. So we're going to emphasize our independence right on the title of the audit report. Remember the IFU tip, very important. So Independent Auditor's Report. The report is generally addressed to those charged with governance at the clients. The audit committee, the board of directors, could be even the stockholders of the corporation, but we don't address it to the management because we are auditing these financials. They've been prepared by the management. So we don't want to address our audit report to the management because we are auditing their work. So then we start with an introduction on our report. So we have a paragraph introducing what have we done as auditors. So we say we've come out here and we have audited these financial statements. So that's the intro paragraph. We have audited the financial statements. So we would say the title of those financial statements, the balance sheet, statements of income, statement of cash flows, statement of stockholders' equity, and we would also mention the period or the date. So period for all the statements, the date for the balance sheet. And then we'll talk about management responsibility. So guys, we've audited these financial statements. These financial statements, they are the management's responsibility. So that's the second para out here. So we would say management, they are responsible. So management responsibility is for the financials, and management, they are also responsible for the internal controls that create these financials. So we've talked about our work, we've audited financials, we've said management is responsible for the financials. Now it's time for our responsibility on this report. So the third para, that's for the auditor responsibility. There's a lot of content on the auditor responsibility para of the audit report. So I'll make it very easy for you. I'll give you lovely mnemonics which will make sure you always remember your responsibility. You always know what's the scope of your audit. So guys, I'll make sure with the lovely mnemonics that I'm going to give to you. So the first line that you'll have for auditor responsibility is area per gas. So auditor responsibility, that's your area per gas. So A of area stands for auditor, R is responsibility, E is express an opinion, A is audit. So as auditors, our responsibility is to express an opinion on these financials based on our audit per gas. So that's our responsibility. So we've audited the financials, management is responsible for the financials. Our responsibility is to express an opinion on these financials based on our audit, which we have done as per gas. Then we're going to talk about the scope of our audit. And this is pretty lengthy, and again, another mnemonic for you out here. So guys, remember we said we do our audit, we give our audit report. Now our audit report, our audit adds credibility to these numbers. That's the purpose of audit. So basically, the scope of our audit is we're going to prepare to pep up these financials, add credibility to these financials based on our audit. So we're going to prepare to pep up financials with our audit opinion. So guys, our area per gas is to prepare to pep up these financial statements with our audit opinion. So let's look at prepare. The P of prepare stands for plan and perform the audit to obtain reasonable assurance. How do we do that? By gathering audit evidence. That's the E. How do we gather evidence? By performing audit procedures. That's the P. And as part of performing audit procedures, we also assess A, the risk of material misstatement, R. So we assess the risk of material misstatement of the financials, whether you do error or fraud. So that's prepare. So once again, we plan and perform the audit, P, to obtain reasonable assurance by gathering audit evidence, by performing audit procedures. We also assess the risk of material misstatement of the financials, whether you do error or fraud. So that's prepare. So we're going to prepare to pep up the financials. So our audit also includes evaluating whether the accounting policies, the P of PEP, are they appropriate? The accounting estimates made by management, are they reasonable? Are the financials fairly presented? So when I'm looking at PEP, we're talking about policies, estimates, and presentation. So our area per gas is to prepare to pep up these financial statements with our audit opinion. So we make sure we gather sufficient appropriate audit evidence, which is the basis for our audit opinion. So guys, this first line, that's our responsibility as auditors. These 3 lines, that's the scope of our audit. So let's look at the way we moved on with the report. We've started with the intro para, where we said we have audited these financial statements. Second para, we said management is responsible for these financials. Third para, we say we are responsible for our opinion on these financials, which we express based on our audit per gas, where we have prepared to pep up the financial statements with our opinion. So now it's time for the very important opinion para. Guys, that's the reason why we're here. That's the reason why we have paid all the big bucks for. That's our fourth standard of reporting, expression of an opinion. So that's your fourth opinion para. And on the opinion paragraph, we're going to say we've audited these financial statements and we found that they are in conformity with GAAP. So in our opinion, the financials, they are as per GAAP. Guys, this is the unmodified opinion, standard audit report. So all is well out here. Now, let's look at the 4 reporting standards that we have. Report all clean and dirty elements. Remember that? So A of all clean and dirty elements, that's accounting principles equal to GAAP. And I told you, that's an explicit standard. So on our audit report, we explicitly mention whether the financials, they are as per GAAP. The second reporting standard, consistency, that's implicit. That means if you are silent about it on audit report, they're consistent. So nothing is stated. So we haven't stated anything about consistency on the opinion paragraph, which means that the financials, they are consistent. Disclosures, we haven't talked about disclosures on the opinion paragraph. That means they've made proper disclosures. Then E is expression of an opinion. So we've expressed an opinion. So we said, in our opinion, these financials, they are as per GAAP. So expression of an opinion, again, that's explicit. So the first and the fourth standard, they are explicit standards. The second and third standards, they are implicit. So guys, that's the 4 paragraphs that we have on our audit report. After we're done with this, all these 4 paragraphs, we're going to sign it. You're going to write a place and the date of audit report. And with this, we are ready with this lovely template for our standard audit report.
On page 4 of Audit 6, we're looking at a standard audit report where the auditor expresses an unmodified opinion. Highlight unmodified opinion, and on the bubble there, put in Roman numeral 1. Now, we'll start with looking at a gas audit. So write non-issuers is equal to audit per gas. You have the standard audit report printed on this page. Look at the title of the report. It says Independent Auditor's Report. So right on the title, we clarify that the auditor, he's independent. Put a box around that. Look at the first line. It says to the board of directors of ABC company, those charged with governance. So this is basically an appropriate addressee. Circle 2. And then we have the intro para, which says we have audited the accompanying financial statements of ABC company, which comprise the balance sheet as of December 31st, 2011 and the related statements of income, changes in stockholders' equity and cash flows for the year then ended, and the related notes to the financial statements. So this is our intro para. On the left, right, intro para. And 2 important things that you got to note here. Number 1, we announce that we have audited. Highlight, we have audited. And what have we audited? The accompanying, highlight, financial statements of ABC company. So basically the intro para talks about we have audited the financial statements. Then you have the management's responsibility for the financial statements. Highlight management's responsibility and put a box around that. Let's read. It says management is responsible for the preparation and fair presentation of these financial statements in accordance with the accounting principle generally accepted in the United States of America. This includes the design, implementation, and maintenance of internal control relevant to the preparation and fair presentation of financial statements that are free from material misstatement, whether due to fraud or error. So guys, this is management responsibility. Highlight, management is responsible. And they are responsible for the financial statements. They are responsible for internal controls. So highlight financial statements, and on the third line there, highlight internal control. So we've Then our intro para, we have written the management's responsibility. Now it's time for us to describe our responsibility. Highlight auditor's responsibility, put a box around that. Let's read auditor's responsibility. It says, our responsibility is to express an opinion on these financial statements based on our audit. We conducted our audit in accordance with the auditing standards generally accepted in the United States of America. Those standards require that we plan and perform the audit to obtain reasonable assurance about whether the financial statements are free from material misstatement. An audit includes performing procedures to obtain audit evidence about the amounts and disclosures in the financial statements. The procedures selected depend on the auditor's judgment, including the assessment of the risks of material misstatement of the financial statements, whether due to fraud or error. In making those risk assessments, the auditor considers internal control relevant to the entity's preparation and fair presentation of the financial statements in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. Accordingly, we express no such opinion. An audit also includes evaluating the appropriateness of accounting policies used and the reasonableness of significant accounting estimates made by management, as well as evaluating the overall presentation of the financial statements. We believe that the audit evidence we've obtained is sufficient and appropriate to provide a basis for our audit opinion. So guys, we have summarized all the auditor's responsibility in the one-line mnemonic that we have. So write area per gas is equal prepare to pep up the financial statements with opinion. Once again, area per gas is equal to prepare to pep up the financial statements with opinion. So guys, as we know, our audit report, the opinion that we express on the financial statements, that adds a lot of credibility to the financials. So basically, as part of our audit, we prepare to pep up the financial statements with our opinion, because our opinion, that's very important. That adds all the credibility element to the financials. So let's look at the mnemonic area. So AREA, that basically stands for auditor's responsibility, which is highlight express an opinion on the financial statements based on highlight audit. So auditor's responsibility is to express an opinion based on his audit, which is done per gas. So we conducted our audit in accordance with the auditing standards generally accepted in the United States. Then you have prepare, the P of prepare highlight plan and perform. R of prepare highlight reasonable assurance. E highlight evidence about the amounts and disclosures. The second P of prepare highlight procedures. The A highlight assessment. The second R highlight risks of material misstatement. And the last E of prepare, that's error of fraud, so highlight fraud or error. So guys, the area per gas is to prepare and prepare for pepping up the financial statements. Pep, come down a few lines, highlight policies, estimates, highlight presentation, and highlight financial statements. So prepare to pep up the financials with what? With an audit opinion. So highlight, we believe that the audit evidence we've obtained is sufficient and appropriate to provide a basis for our audit opinion. So guys, in the major part of the auditor's responsibility para, we've basically described the scope of the audit. So right from the second line on the auditor's responsibility para to the last line, put a bracket and write scope of the audit. The last line of the auditor's responsibility para reads once again. It says, we believe that the audit evidence we've obtained is sufficient and appropriate to provide a basis for our audit opinion. Now, I want you to put an arrow from the word opinion to the next para, which is actually the opinion para, and highlight opinion, put a box around opinion. Let's read. It says, In our opinion, the financial statements referred to above present fairly in all material respects the financial position of ABC Company as of 31st December 2011 and the result of its operations and its cash flows for the year then ended in accordance with accounting principles generally accepted in the United States of America. So look at this para. It starts with in our opinion. Highlight that. Very important. So this is expression of an opinion. So we express an opinion whether the financials they are in accordance with GAAP. Then you have the auditor signing off, auditor city and state, and the date of the auditor's report. So basically, guys, 4 parts of this report: intro para, management responsibility, auditor responsibility, and the very important opinion para. Look at the way this audit report flows. So to the right of the management responsibility para, I want you to write financial statements per GAAP. So management, they prepare the financials as per GAAP. Then put an arrow down and on the right of the auditor's responsibility para, write audit per GAS. So guys, management, they have prepared the financials per GAAP. Then we came in, we did our audit as per GAS. And then we expressed our opinion. So draw an arrow down and write opinion if financial statements is equal to GAAP. So once again, management, they prepared the financials per GAAP. We did our audit per GAS. And then we expressed an opinion if the financials, they were in accordance with GAAP. So we talk about GAAP in the management responsibility para and in the opinion para. We talk about GAS in the auditor's responsibility para. So this is the standard audit report. Let's move to page 5 and look at all the components of the audit report in a little more detail. On top of page 5, we've got title and addressee. The title we've seen highlight independent auditor's report. Addressee highlight to the board of directors and or stockholders of ABC Company. Now, since it was the audit committee or the board of directors, basically those charged with governance that hired the auditor, that is the party to which the auditor is reporting. Now, it is acceptable to address the report directly to the company, its shareholders, or to a third party that hired the auditor to examine the financial statements. Now, note this third sub-bullet there. It says, since management is the party the auditor is reporting on, the auditor's independence requires that it cannot address the report to the management. Underline this, cannot address the report to the management. Then we've got the intro para where we say we've audited the accompanying financial statements of ABC Company, which comprise the balance sheet as of 31st December 2011 and the related statements of income, changes in stockholders' equity and cash flows for the year then ended, and then related notes to the financial statements. So first we state that the financials, they've been audited. Highlight we have audited. Identify the entity. Here it's ABC Company. So highlight entity. Highlight title of each financial statement, balance sheet, income statement, stockholders' equity, cash flows, related notes to the financials. And then highlight date or period covered by each financial statement. So for the balance sheet, it was as of 31st December 2011. For the others, it was for the year ended 31st December 2011. So that was the intro para. Now we're looking at highlight management's responsibility for the financial statements. And this para is with an heading. So highlight or underline with heading. You have management is responsible for the preparation and fair presentation of these financial statements in accordance with US GAAP. So highlight management is responsible and highlight financial statements in accordance with accounting principles generally accepted in the United States of America. Then you have this includes the design, implementation and maintenance of highlight internal control relevant to the preparation and fair presentation of financial statements that are free from material misstatement, whether due to fraud or error. So management, they're responsible for financials. They are responsible for internal controls. So put a note there which says management is equal to financial statements per GAAP. Turn to page 6 and here we are looking at auditor's responsibility. Highlight auditor's responsibility, underline with heading and write auditor is equal to audit per gas. Now you have a lot of bubbles out here. So what we'll do is we'll first fill in a few bubbles and then do the highlighting. So on the bubble fill in AREA and fill in gas. So that's the area per gas. So where A stands for auditor, R stands for responsibility, highlight responsibility. E of areas, that stands for express an opinion, highlight that. A, it's audit again, so highlight audit, which says we conducted our audit in accordance with auditing standards generally accepted in the United States. So that's the US gas. So the area per gas, let's fill in the next few bubbles. You have prepare, so fill in PREPARE, and let's highlight prepare. So P of prepare, highlight plan and perform. R, highlight reasonable assurance. E, highlight evidence about the amounts and disclosures. The next P, highlight procedures. A, highlight assessment. R, highlight risks of material misstatements of the financial statements. The E of prepare, error or fraud, so you can highlight fraud or error. So area per gas is to prepare to pep up the financials with opinion. So on the bubbles slightly below that, write PEP, PEP, write F/S financial statements and write opinion. And highlight policies, highlight estimates, highlight presentation and highlight opinion. Because we've used this lovely mnemonic to try to summarize our auditor's responsibility. So look at the next bullet. It says auditor responsibility is to express an opinion based on audit per US gas. So again, on the left, write area per gas and put circles there. So circle A of auditor, R of responsibility, E for express an opinion, A for audit, and circle the gas. So it's again area per gas, and that's to prepare. So around the next two sub bullets, put a bracket and write PREPARE, prepare. And let's again try to identify the elements of prepare. Put a circle around P, which is plan and perform. Put a circle around R, which is reasonable assurance. And basically audit involves obtain audit evidence. So put a circle around E. So that's the E of prepare. By performing audit procedures, put a circle around P, that's the second P. As per auditor's judgment, RU CPAs, R plus U plus C, that was the risk assessment procedures which we did to assess RMM of the financials, whether you do error or fraud. So circle A of assess, circle R of RMM, and the E of fraud. So that becomes our prepare, and we are preparing to pep up the financials with our opinion. So the third sub bullet that talks about, put a bracket and write pep up financial statements with opinion. Put a circle around P of policies, E of estimates, P of presentations, circle F/S financial statements, and on the last line on this page, circle opinion. So guys, we've done the same exercise twice over, and I really want you to understand this because the elements of auditor's responsibility could be very important from an examination perspective. Move to page 7. Here we're talking about the opinion para. Highlight opinion, underline with heading. So we start our opinion para with the 3 words in our opinion. Highlight that, and on the left write express an opinion. So let's read. In our opinion, the financial statements referred to above present fairly in all material respects the financial position of ABC Company as of 31st December 2011 and the results of its operations and its cash flows for the year then ended, highlight in accordance with the accounting principles generally accepted in the United States of America. And make a note which says if financial statements is equal to GAAP. Let's link the two notes that we've made on this page. So we say the auditor expresses an opinion if financial statements are equal to GAAP. Now let's understand the opinion para using the 4 reporting standards that we had in the traditional 10 gas concept. So you had all clean and dirty elements, and if you remember I said A, which is accounting principles equal to GAAP, that's an explicit standard. C, the next standard, consistency, that's implicit. Disclosure, implicit. So we don't talk about consistency and disclosure unless there is a problem with consistency or disclosure. The 4th standard, the E of elements, that stands for expression of an opinion. That needs to be explicit. We need to express our opinion. So guys, look at this, highlight explicit, put A in the first bubble and highlight first standard accounting principles is equal to US GAAP. So we explicitly state whether accounting principles are in accordance with GAAP. Next bubble, write E and highlight 4th standard expression of an opinion. That needs to be explicit. Next, highlight implicit. So implicit reporting standards of gas audit only require comments when not complied and would result in a report that is different from the standard report. So on the standard audit report, don't mention about, right, C, second standard consistency, right, D and highlight 3rd standard disclosure. Then you have note that the opinion para does not refer to the financial statement by name but indicates the matters that are being fairly presented. So you have the financial position, that's talking about the balance sheet. You have the results of operations, talks about the income statement. Cash flows talks about the statement of cash flows. And guys, this is an opinion on the financial statements taken as a whole. So right there, opinion on financial statements taken as a whole. Now turn to page 8. We'll be looking at the auditor's signature, the auditor's address, report date. Highlight auditor's signature, highlight auditor's address, highlight audit report date. And we know that this is the date on which sufficient appropriate audit evidence has been gathered. Basically, this is highlight last day of fieldwork, not the date on which the report is signed. So remember the last date of fieldwork, that's the date we collected the management rep letter, and that's the date on our audit report. Now, if you also remember in audit 4 subsequent events, we talked about highlight dual date option for footnote. And right there, refer audit 4 subsequent events. So let's read this. It says, if the auditor discovers information which would need to be disclosed as a footnote on the financials after the date that sufficient appropriate audit evidence is obtained, that's fieldwork is completed, but prior to the signing of the report, the auditor may dual date the report, providing the date on which the footnote info was obtained to supplement the basic report date. So in this case, there would be 2 dates on the audit report. Number 1 is the date of audit report, and the second date where the auditor's responsibility extends to the subsequent date only for that particular subsequent event mentioned on the footnote, not for the entire financial statements.
Now, we've looked at the standard audit report for non-issuers as per the statements on auditing standards issued by the AICPA, the Auditing Standards Board, or the ASB of the AICPA. So this is for non-issuers, non-public companies. Now, for issuers, public companies, they have to follow the Public Company Accounting Oversight Board's auditing standards. So the audit report there is a little different from this audit report. Now, I'm going to put all the differences down for the standard audit report for issuers in 4 points. Number 1, instead of having the independent auditor's report as the title. The title is Report of Independent Registered Public Accounting Firm. So guys, independent, that's same. Registered. So an auditor of an issuer needs to be registered with the Public Company Accounting Oversight Board. So it's a public accounting firm registered with the PCAOB. So that's the first difference in the title. Then the second difference. So we had 4 paras here. So you had the intro para, you had management responsibility, auditor responsibility, and the opinion para. Now for issuers, instead of a 4 para, it's a 3 para report. So you have the intro para, the management responsibility and auditor responsibility are a little less detailed and they're included on the intro para. So on the intro para, we say we've audited the financial statements, management is responsible for the financials, we are responsible for our opinion on these financials. So that becomes the intro para. Then the second para, that's called the scope para. So on the scope para, we say we've done our audit and then we describe the scope of our audit. Third para is the opinion para. So instead of having 4 paras like this, we just have 3 paras: intro, scope, and opinion. So that's difference number 2. Difference number 3, instead of saying that the audit is done as per GAS, we say that the audit is done as per the Public Company Accounting Oversight Board auditing standards. So guys, for non-issuers, it's GAS. Remember that? For issuers, public companies, it's the PCAOB's auditing standards. And the fourth point of difference is that in case of a public company audit, it's an integrated audit, an audit of internal controls over financial reporting integrated with an audit of the financial statements. So let us say if the auditor is having 2 different reports, one report for the audit of financial statements, another report for the audit of internal controls over financial reporting. There is going to be a para on this report on financial statements after the opinion para, which is going to refer to that report on ICFR, that report on internal controls over financial reporting. So 4 differences, again a quick recap. So the title, instead of saying independent auditor's report, it's an independent registered public accounting firm. Instead of having 4 paras, you've got 3 paras. Intro, so intro's got intro plus the management and the auditor responsibility, scope, opinion. Third difference, instead of saying audit is done as per GAS, you say the audit is done as per the Public Company Accounting Oversight Board auditing standards. Number 4, it's an integrated audit of financial statements integrated with an audit of internal controls over financial reporting. So if it's 2 separate reports, one for financial statement audit, one for ICFR audit, the last para of the financial statement audit report should refer to the ICFR audit report. So guys, let's get to the book. Look at a standard audit report under PCAOB's auditing standards for issuers.
On page 9 of Audit 6, we're looking at the standard audit report required by the Public Company Accounting Oversight Board. That's for auditors of issuers, public companies. So right there, issuers is equal to audit per PCAOB AS, or the Public Company Accounting Oversight Board's auditing standards. Look at the title of this report. It says Report of Independent Registered Public Accounting Firm. So we know that the auditor is independent, but here we have highlight registered public accounting firm. And for registered, draw an arrow and write registered with PCAOB. So only public accounting firms which have registered themselves with the Public Company Accounting Oversight Board are allowed to audit issuers. First line is an appropriate addressee. In this case, it's to the board of directors of ABC Incorporated, basically those charged with governance. Then you have an intro para. We say, we have audited the accompanying balance sheet of ABC Incorporated as of 31st December 2011 and 2010, and the related statements of income, retained earnings, and cash flows for each of the 3 years in the period ended 31st December 2011. These financial statements are the responsibility of the company's management. Our responsibility is to express an opinion on these financial statements based on our audit. So look at the intro para here. You said we've audited, we've identified the financial statements. It's comparative financial statements. Basically, SEC requires public companies issuers to report comparative numbers. So balance sheet is basically last 2 years, and then you have income statement, stockholders equity, cash flows. That's for the last 3 years. Now, on the speakable report, right on the intro para, we are also talking about the management responsibility. So instead of a separate para on management responsibility, it's put on the intro para. Even for the auditor's responsibility, we have a line which says our responsibility is to express an opinion on these financials based on our audit. So guys, what you can say is, management responsibility, auditor responsibility for the PCAOB report for issuers, that's less detailed. So put a bracket on the right and write less detail. Then the next para on this report is the scope paragraph, which says we conducted our audit in accordance with highlight standards of the Public Company Accounting Oversight Board US. So for non-issuers, we said we conducted our audit in accordance with US GAS. Now it's the PCAOB, the Public Company Accounting Oversight Board's auditing standards. Then let's continue reading. Those standards require that we plan and perform the audit to obtain reasonable assurance about whether the financial statements are free of material misstatement. An audit includes examining on a test basis evidence supporting the amounts and disclosures in the financial statements. An audit also includes assessing the accounting principles used and significant estimates made by management, as well as evaluating the overall financial statement presentation. We believe that our audit provides a reasonable basis for our opinion. That leads us to the opinion paragraph. In our opinion, the financial statements referred to above present fairly in all material respects the financial position of ABC Inc. as of 31st December 2011 and 10 and the results of its operations and cash flows for each of the 3 years in the period ended 31st December 2011 in conformity with US GAAP. So that's the 3 para: intro, scope, opinion. Now look at the 4th para and highlight reference to ICFR report. Remember we said under SOX, it's an integrated audit, is equal to financial statements plus ICFR. So it's an audit of internal controls over financial reporting, which is integrated with an audit of financial statements. We talked about this in detail in Audit 3, if you don't remember. Now, we have 2 options here. We can present one report for both the audits, for the financial statement as well as ICFR audit, or present 2 separate reports. So there'll be one report for the financial statement audit, something like this report, and you have another report for the ICFR audit that we saw in Audit 3. Now, if you have separate reports, make sure the last para on each report refers to the other report. So the last para on this financial statement audit would refer to the ICFR report. So highlight the entire para. It says, we also have audited in accordance with the standards of the PCAOB ABC's internal control over financial reporting as of 31st December 2011 based on criteria established in internal control integrated framework issued by the COSO of the Treasury Commission and a report dated 28th Feb 2012 expressed an unqualified opinion thereon. Then you have the auditor signing off with the city and state or country and the date of auditor's report. You can turn to page 10. We'll be looking at the key differences where you have what you have in the audit report for issuers. And a couple of noteworthy differences. That's basically the title where you have report of independent registered public accounting firm, less detailed discussions of management and auditor responsibility. On the scope para, don't refer to US GAS, instead refer to the standards of the PCAOB. Further to the integrated audit requirements, PCAOB standards require an opinion on ICFR, which may be issued as a separate report like we have in this case. So we have one report for financial statement audit, a separate report for ICFR, or you also have an option of a combined report.